Well, we have some reports coming out from USDA. We get a Cotton Jennings report tomorrow from USDA. Livestock slaughter report on Thursday, and then Friday a handful of reports including food price outlook, weekly exports, cattle on feed, cold storage, and milk production. I think 5 is a handful, right? So anyway, reports coming out from USDA this week. All right, where are we as far as trading corn? The corn market has been moving higher all day long, and as we go to the big board now, corn futures nickel higher on the front month at $4.89 1/4, with new crop at $4.59 1/2, just a tick off the day's high, trading 3.5 higher. Over to soybeans. Soybeans with big gains throughout the session. March up 28 at $10.62 a bushel. That's just a penny off the day's high, with the deferreds all 22 to 27 3/4 higher. Soy meal contracts have been higher all day long, remain there. Soy oil has been under pressure. Now to the wheat market. Wheat has been on a tear higher, up 21 3/4 old crop on Chicago, 560 1/2, with the July 582 up 21 1/2. Hard red, July 593 1/4, it's up 26. Spring wheat, the new crop, December 649, it's up 17 3/4, and the new crop for cotton, December 69.52. That's up 40. Ted Seifried's with Zaner Ag Hedge. And Ted, good to see you back home after spending some time in Central America.
Yeah, it's good to be home, Tony, although I probably could have stayed a couple days because it is really cold here. It's really cold here.
Now, you were at the Panama Canal, and what an amazing experience to really see what's happening there. You come back with a greater appreciation, I would imagine, for how we're moving our grains through the canal to Asia.
Yeah, absolutely. Infrastructure is a very cool thing, Tony, and like the size of these things, size of some of these ships, the size of these locks and dams. Wow, just kind of breathtaking. It is in a very beautiful setting. I will say, Panama is a beautiful country, really cool downtown area. So yeah, all things considered, it was a great trip. I'm really happy we did it.
Okay, now let's turn our attention to what we're actually moving through that canal, and we do move U.S. corn through there. Obviously, we'll move soybeans. Sorghum goes through there. We'll move ethanol. We move quite a bit through there. What are you seeing in the markets today?
Well, we're higher, Tony. I mean, for a number of reasons. For one, we didn't have any tariffs on day one, and day two, well, half so far done with day two, I guess. We haven't heard anything from tariffs. Nothing with China. There's been a little talk about Canada and Mexico, but nothing enacted yet. So there's a big sigh of relief happening with markets. And in the meantime, there's this continuing story of too much rain in Mato Grosso and in Brazil, slowing their harvest down, the slowest pace that we've seen in a while, although it's really just the start. That can change very quickly, but either way, that is a friendly thing for the market. There's talk that China was talking about tighter restrictions on Brazilian imports. I think that is a function of the rains that are happening right now. China is just warning Brazil that, hey, we don't want to take any lower quality beans if that happens with these rains that are occurring. And also, I think it's just China being China. I do worry that the Chinese economy is not looking good, that maybe they front-loaded a lot of their purchases, and this is them getting ready to potentially have an excuse to make some cancellations. But at least that's not the way the market's looking at it right now. And then even wheat coming along with everything on the idea that with these really cold temperatures that we're having, there's not a lot of snow cover out there. And we've got more cold in the forecast, not a lot of snow. So there's going to not only is wheat dealing with a winter kill issue now, but it looks like we might have a few more of them, at least 1, 2, possibly 3 more of these big cold air masses coming through. So lots of positive things going on. That can all change in a heartbeat if we wake up tomorrow morning and there's a big change in the Brazilian forecast or Trump tariffs, and then we get back into that spat again. But at least for today, everything feels all warm and fuzzy, Tony.
All right, Ted Seifried, hang on. We'll come back in a moment. We'll talk livestock futures next. Market Day Report continues in a moment. Just looking at the cattle market, we remain in mixed territory as we race to the close. Live cattle futures mixed with February up 40 at 197.15, 2 dimes lower on the April contract trading 197.30, and then we're off the curve down to 192 on the June contract and below that on the August. Over to the feeders. Feeders now lower except for the January contract. January's been in positive territory all day, but the March down 90, most active 267.15, and the deferreds are lower as well. What about the hogs? Well, the front month is now down 15, February at 80.97. That actually turned red within the last hour or so. April 86.60, down $1.72, and look at the June. It's already dropped below $100. It's back up above it, but will we settle with 3 digits there, 100 or higher? That is another question we've got out. Ted Seifried's with Zaner Ag Hedge, and you look at the proteins, what are you seeing?
You know, like you said, a very mixed market in the live cattle, which I think is actually a small win considering that feeder cattle are under pressure. You look at the live cattle market, it seems to be saying that this is just a bit of a correction in the feeder cattle, not a new direction, so to speak. But, you know, we'll see. As far as, again, live cattle are concerned, we're kind of pausing before we really take another shot at, I think, at the $2 mark. We're just hovering right below it. So this is just sort of an area of consolidation before we go test a very key psychological resistance level. And by and large, I think, you know, you look at the stock market, you look at everything else going on, and everybody's feeling pretty good about the economy and the prospects moving forward with this new administration. And as we talked about on the radio on Friday, I don't know if I'm really on board with that. I'm a little nervous about what happens here over the next few months. When you want to tackle things like inflation, well, the way to do that is to make things a little bit more difficult, like to really slow down GDP, to slow down growth, and make people question their spending habits. So I don't know. You know, I'm taking today with a grain of salt when it comes to the strength in stocks and things like that. And I do think it is a good idea for the cattle complex in particular, to be looking at producers, to be looking at downside protection at this point. Hogs, I think, are under pressure, partially because, you know, everybody's feeling warm and fuzzy about beef demand, that we're not so sure if that means any influence for hogs. So I think some of the investment money that had been looking at hogs as a recessionary play might be exiting at this point.